Joining me now at Post 9 is JPMorgan's head of technical strategy, Jason Hunter. It's good to see you in person. Welcome.
Yeah.
You say the bond market holds the key to the whole market in your mind.
Yeah, because we have a lot of macro uncertainty here. As technicians, you stop into the breakout that happened in September and you follow the trend, provided the trend still looks healthy, which it does. But when you're trying to get some type of foresight and you worry about inflation, reflation, disinflation, we really feel that the 10-year tips break-evens is the thing to watch. And for right now, it looks okay. It's contained in its range. So like I said, things are constructive for equities.
But if it breaks out of that range to the upside, reading that you could have a reflationary effect?
Well, that would be more on the inflationary side. So if we're looking at 10-year tips break-evens, 240 to 250s define the range for multiple quarters now, really when that first inflationary panic started to come off the boil in 2022 and into 2023. Like I said, break-evens have been well contained below that 240, 250 area. This most recent run-up that we had into and after the election rejected that resistance again and fell off, suggesting that inflation expectations are contained and there's no real fears of inflation at the moment.
So then you must be pretty positive on the stock market then.
That's correct, yeah. And what's interesting is you're starting to see the breadth broaden out, the Russell breakout, Russell-NASDAQ ratio, pressuring its resistance. It's been in a range for the better part of 2024. That's constructive, especially if that starts to break to the upside.
You feel like more broadening then is in the offing?
Yeah, and you're already starting to see that really. I mean, when you look at the ratio of something like Russell, which has really been underperforming, small caps underperforming for the better part of 2 years.
Picking up, though, a lot lately, right?
Yes, that's right, yes.
Up 10%, the Russell's up 10% in a month, as we said earlier in the program.
Yeah, and it's not only been constructive in absolute terms, but when you look on a relative basis, the Russell versus the NASDAQ performance troughed in July. And mega caps really underperformed to performed in line with Russell since then. So you're already starting to see that broadening and the breadth start to expand.
Some have suggested you could get 6,300 on the S&P by the end of this year. I mean, just given where the trend is, what kind of numbers do you have in your own mind?
I think the next big upside target is 61.95. I think that's my most likely target for late this year, early next year. I think what you see if you get this continued rotation and mega cap continues to lag in that rally, naturally that's going to take some of the wind out of the sail for the S&P, given how heavily weighted those leaders have been in the index. So it's more, like I said, more of a Russell and S&P equal weight.
Equal weight. I've got people
yes.
coming out of the woodwork today, I feel like, talking about the equal weight for that very reason.
Yes, yeah. And there's a number of things, seasonality, January effect potentially getting pulled forward here. There's a number of reasons why you could see that play out into early next year.
Areas of the market that we really need to keep our eye on include what? Like besides bonds, what like asset classes? So
I would say on a near-term basis, watching the trends in equities is most important. But as we get into January, if we do hit those upside targets, the question is what happens next? So I think what you really need to see for that broadening to continue is some recovery in the global manufacturing story, where if you look at, it's been very much a U.S.-centric story across the asset classes. You can see that especially in FX. You'd want to see those, let's say, outside the U.S. stories that generally have high correlation to the global manufacturing story, things like the copper-gold ratio, EM equities. You want to see them at least catch their footing and base and start to move up. It's all part of that broadening breadth story. Normally that correlates with Russell outperformance of things like NASDAQ. We really want to see that unfold into early next year to really reinforce this healthy broadening type of advance.
Do we assume a continuing stronger dollar as a result of expected policies from the new administration?
So there should be some more. I mean, if you look at our FX team's outlook, there is a continuation of the stronger dollar into the first quarter, at which point it hits an inflection, starts to top out, and things like euro form a base and start to recover.
What about commodities then as a result of that?
So if you look at the commodity market, as far as from a technical perspective, and I think our fundamental view is very much in line for JPMorgan, we're expecting range trading. I think the most important thing to watch are things like industrial metals versus precious metals. You want to see industrial metals start to outperform precious metals. And again, that's something that's very much
that's when you talk about the copper-gold ratio, correct?
Exactly, that's right.
All right, Jason, it's good to see you here. Thanks for coming by.
Thank you for
Jason Hunter of JPMorgan.